Hey everyone, welcome back to the TraderLion channel. This is Richard here with Ross Haber, and today we're continuing on with our chart of the week series talking about OXY, Occidental Petroleum, which was also our stock of the week last week, but we're revisiting it because it continues to set up and shape up here within a short-term base, and this is still one of the leading stocks in the leading group, and definitely worth watching going into next week as it kind of forms out the short-term flag right above those key moving averages. As always in this video, we'll talk through the price action, the fundamentals, and if you want more information on the top down report, which this is featured on, go ahead and click the link down below in the description, and it should also be popping up right now. With that, Ross, I'll hand it over to you, and just give us kind of your take on the overall chart and kind of what you're watching for up to this point and what you're watching for next week as it's setting up.
Thanks, Richard, for sure. So at this point, oil stocks, coal stocks, the cyclicals continue to act extremely constructively and lead the way. They are the clear leaders of the market right now. They are making the most powerful moves. They're the most liquid. They've got incredible earnings, institutional sponsorship, and they're respecting logical areas of support across the board, really. We're not showing the 23 exponential here, but if you look at OXY and a lot of the other leaders in the very same group, they all have an extremely similar pattern, powerful, tight, and they all have been, for whatever reason, showing a very clean, definite respect for the 23-day exponential moving average. And again, here you see this explosive move on huge volume. While the market has been selling off actually over the last couple of weeks, oil stocks have held up sideways above their short-term moving averages. Volume has peeled back. That's telling you there's no real sellers anxious to get rid of stock there. The one time we do see a big pickup in volume here that accompanies super solid price action to the upside. And this is after that, what do we see here? More or less 4 tight inside days as volume has tapered off every day just above. So you've got the, if you want to call this a pennant, right, marked by these two diagonal lines, the bottom pennant line lines up with its 10 and 21 day moving average. So really this is one, obviously we've got to watch and see how everything opens on Monday, but assuming all of these stocks continue to show the same sort of respect and you could pick up some stock, you know, let's say 59.60-ish in anticipation of, because it's so liquid. Now listen, you can't do that. The most important thing is that you settle sell stop somewhere below these moving averages. You want to give it a little bit of room. Keep in mind the 23-day moving average is where the stock is going to get support where it's not on here, but that's just a way to, if you wanted to try and start if you're trying to, let's say, make this 15% position in your portfolio and you want to buy. So what I'll typically do for something like that, if that's what I'm shooting for, is I'll buy it 5% at a time. But I would tell you this, when I'm working on the first 5%, I might buy that 2.5 and decide, you know what, I'm going to risk 2.5, 3% on an anticipating because I believe my edge and the way things are shaping up here, it's worth it to me to at least start a smidge of my position here, managing super tight logical risk. And then again, you know, Bill talks about the diagonal line across the tops of a handle. This is not a handle, but in the same way you can do that. If volume is enormous as we're coming through this area, and it's clearly huge, again, you can start early. So those are two earlier spots, you know, just that I would like to point out. In addition to, this is a much more classical pivot on this tiny little consolidation here. The highs of this, you know, you've got this high volume close right there. You want to buying through there, but still that high is 62.09. You could throw your stops at 60, 59, give it $2, $3, and that still keeps it tight and logical. It gives it plenty of room to move if you get a whippy day in the market and you're playing in one of the, strongest stocks in the strongest groups out there. That's exactly what you should be doing. It may not be a sexy electric vehicle stock with really cool cars or super cool technology. But at the end of the day, given our economy and what's going on out there, energy, oil, coal, and cyclical stocks are where the growth is and where the true demand is by the big institutions at the end of the day, right? The big institutions control 70% or more of the volume in the entire market. So that being said, Richard, I think I've pretty much beat that one into the dirt. So I want to hand it over to you to discuss the fundamentals.
Yeah, sure thing. And just on the charting side of things, you've got a nice inside day and up potentially on Monday, super low volume right here. And remember, this is a log scale. So this is even more of a significant dry up than you may think. And once again, this is a super strong stock, RS rating 99, RS line right near all-time highs, even though the stock is a little bit lower within the consolidation. So a lot of super constructive things going on. And I love seeing this power on volume, as Ross pointed out. In terms of earnings sales margins, you see super strong cores the past three, great estimates for 2022. The 2023 numbers, I would like to see this be positive. We're seeing a drawback here, so that's kind of the one negative here, but estimate revisions are up. So that's a slight positive there. And in terms of institutional fund ownership, we're seeing a nice uptrend, especially over the past few quarters. So things look good. As Ross said, this is one of the leading stocks in the leading groups. And we'll just have to see how this setup plays out. I think it's key to watch, Monday's action to see if it's going to push up, or it might decide to break out, or it's not quite ready yet. We might go sideways, have an upside reversal, shake some people out. So just be ready, be flexible, have a plan for whatever happens, and make sure, most importantly, you manage that risk. And if it does start breaking those key moving averages, that 23 EMA, which it's shown respect to, note that character change and don't fall in love with the company just because, it's been strong before. Respect price action and let that kind of guide your thinking in terms of how to handle this particular stock. So with that, just keep an eye out for a big push on volume, breakout potential on Monday. And Ross, anything else to add on Oxy? Anything we haven't mentioned yet?
No, I think I've said more than enough as it is. So sorry if I blabbed on too long there, everyone, but I want to make sure I covered it well. You know what I mean?
Yeah, absolutely. All right. Thanks so much for watching. I hope you guys did enjoy. If you did, go ahead and leave a like down below and subscribe if you're new to the channel. I'll see you guys in future videos. Thanks.